going on? Looking at the NASDAQ once again. This was a couple days ago. Today is June 28th. For me, it's Saturday. Today we'll be messing around with I did this a couple days ago, but we'll be looking at how I was using the limit orders to add some more contracts, or add one more contract to my position. And you'll see I just set the sell limit order so that when price delivers to that level that I have my limit order at, it's going to trip me into another contract. So right now I'm shorting one contract in the NASDAQ, but I want more. I want one more lot. One more lot is just one more contract, but I put it at the same price that my previous contract was at, so that I don't degrade my position, so that I don't weaken my position. Because if I were to buy at market price right now, where price is right now, it would drop the average of my position, which would put me into the second contract. So I would be in two contracts, but I would have a weaker position. Because if I'm targeting sell side liquidity, the more expensive my position is at, puts me in a better position to make more profit. As the farther price delivers to the sell side, the more money I'll be making. So that's why you have, like, when you put limit orders in, you can't just buy at the market price. You have to demand that price comes back up to your position, and it doesn't always do it. But in this case, it did for me. This is kind of going to be a longer video, about 15 minutes long. You'll see me. So you know how I always talk about how I'd be like, hypothetically, I would have took a position off there, but since I'm always trading with only one contract, you don't see me actually take the position off. Today you'll see me take one contract off. See here, I almost got into the market because I feel like it was going to fail to get back up to my price. Back up to my original position, because I got in at that small sell side imbalance, buy side inefficiency. See it, zoom in, you can see a little better there, that where my position's at is where I got in, and I'm demanding that price goes back up to where my original contract was. See, that would have been a good entry too, but for me, I didn't want to weaken my position. So what price is doing here, if it is going to go lower, if you have a reason to believe price is going to go lower, price is still going to reach for premium arrays. What makes my position a premium array is the fact that price was below it. See how price was below, down my position? So that means my premium, it made my sell side imbalance, buy side inefficiency a premium array. Rule number 3, fuck the B, let's get to the cheese. But yeah, it's really interesting, like all these like repeating behaviors in the marketplace. Never would have thought that, because everyone thinks it's random. And here my stop loss, I have my stop loss pretty, I want to say it's really short, but it's not really big either. It's just a big stop loss because I have two contracts now, so now it's double the leverage. So really, I think I was risking, so at first I was risking $600, I think. which it's not the tightest stop loss, but for me that just means I got in at an okay position. But the logic is that if you look on the right hand side of the screen on the 15-minute chart, you'll see that it rated buy sell liquidity twice in a pretty respectable fashion. Like it ran a couple hundred handles towards higher prices. So for me, it made it I was able to build a strong case off of that. When it comes to like aiming for lower prices. And so that's my draw on liquidity. That sell side liquidity there. But there's also minor sell side that I take a partial at, you'll see here. So now price failed to take out that swing high that I have my stop loss at, which is indicating, yeah, like I failed to take out that high, which indicates its weakness. And then you'll see on that top wick there, it fails to get more than halfway on that wick. So that's two things telling me that price is going to go lower on top of all the relative equal lows below price right now. So I definitely wouldn't call this an A+ setup. This is more like a B setup. It's not super duper obvious that price is going to go lower now because of how much it's been rallying. It's been rallying the whole week, and the markets are really close to all-time highs. I think it's only like 800 handles away from all-time highs from the NASDAQ. All-time high for NASDAQ is like $23,800. Right now it's at like 22 something. So it's really close to all-time highs, and when it's close to all-time highs, it's really difficult to kind of determine where price wants to go because it has a strong pull from the all-time high, but markets usually aren't like a really big event usually takes place to take out or create an all-time high. So it's not really like we're gonna need something like big to happen to take that out. And that's the thing, like with everything going on now, with like all the news and like all this bullshit going on, like it's really hard to tell. These are really difficult markets to navigate. That's not just me saying that, that's like people who are like respected in the industry. They're saying like this is like a really hard time to be traders. And then the summer months is like the markets are kind of like a school, you know. I mean, not really, the markets are always open, but it's kind of like a off season during the summertime. Like it's not really good market conditions to trade over the summer. That's why traders really only have 3/4 of the year to make profit. So it really doesn't give you that much time if you think about it. Like 3/4. Okay, in those 3/4, how many holidays is there? Because not only are the markets closed on the holidays. I'm using the opening range gap here, by the way, for my draw on liquidity. And you see I have my first take profit outlined here, that white line running horizontally on the left hand side of the page, or I guess it's on both pieces of the page, or sorry, pieces of the screen. So I will take my first take profit there. And so right here it skipped, so I clipped another one because if I recorded the whole thing it would take so long. That's why you kind of saw the screen jump there. But see, I reduced my stop loss to reduce risk. But at this point, I'm not expecting price to get higher, anything higher. If it does get anything higher than those two PD arrays, those two green boxes, then I'm probably wrong and offside. So I don't want to be a part of the trade anyways. So, reducing your risk. is pretty important, because since it failed, now that is a new intermediate swing high. So that's an important swing high for the time being. Price should not go any above that. If it does, then I'm probably wrong when it comes to my idea of price going lower. But I'm not wrong. I mean, I'm not wrong. Price has to deliver lower because there's too many smoothness on the sell side. It rated buy side quite a bit. I did get stopped out though on trade. This is I think my second trade of the morning. I got stopped out for like, I think it was like $500 or something. It was a pretty hefty loss. I got crushed by news. So that big jump. So you see that the run on the right hand side where it just goes up, those green bars. That was like a pretty decent news driver. See, I'm highlighting that it took out some minor sell side. So for me, I took the partial out not really at the best spot I could have taken it out on. Like I should have taken it there or somewhere really close. But I kind of take a below not so good position. Or exit, sorry. I always try to wait for price to go lower, but that is a pretty bad habit because price can go higher and like I just lose more, So you gotta stick to your rules. Now I'm reducing risk even more because since I already took a loss today, I don't want to suffer another loss. I say today, but this was a couple days ago. I don't want to suffer another loss, even though reducing my stop loss increases the chances of me getting stopped out significantly. By now, I'm pretty confident that if price doesn't go lower from here, then I'm just wrong anyways. So you might as well not lose any money on it, or any more money on it. Rule number 3, fuck the beat, let's get to the cheese. But yeah, I really like this trade. I forgot that I did this. So, did I really leave it there? Okay. So then I reduced my stop loss even more to the top of the inefficiency that was the catalyst to send price down, because at this point I'm pretty convinced that price is going for the opening range gap consequent encroachment, which I'll show you in a second. Now my take profit isn't on the consequent encroachment, it's a couple handles above it, because if that is a real draw on liquidity, I don't demand it to hit it precisely. I use it as like just like a draw, and kind of like if a quarterback, let's say the quarterback is Price and the target is his wide receiver, obviously I am like the corner trying to intercept Price on its way to its target, increasing the chances of my success. Because what if Price doesn't hit the receiver right where it needs to be hit? See that gap there? That's the opening range gap. So this is the difference between 16.15 the previous day and 09.30 of the current day. That's the gap that's left. So Price has to deliver, fill these gaps. It does end up hitting the middle of it, but that's it for this video. Hope you guys enjoyed. Till next time, peace.